Welcome to UBP's 2020 Outlook podcast with Anthony Chan, UBP's Chief Asia Investment Strategist. Today, Anthony will be giving us some insights about China and what's to be expected for the coming year. Anthony, do you think that China's momentum has been derailed by nearly 2 years of trade disputes with the US?
Yes, I think so. If you look at the Chinese economy, it's really showed a more noticeable slowdown over the past 2 years. Now, if you look at China GDP growth, before the trade war started at the middle of last year, you're talking about close to 7% growth. And now it's slowed down to about 6%. And many in the market expected that 2020 growth will be lower than 6%. Obviously, the export sector, the manufacturing sector has been slowing down due to the trade war, and also particularly companies along the supply chain being affected by the trade war has been holding off their investment decision. This has really caused a lot of slowdown in many sectors related to trade.
And do you believe those trade disputes have spurred China to speed up some of the aspects of its economic transformation?
Yes, I think so. I think that the protracted trade war with the US has really exposed area where China is vulnerable to some of these external pressures, particularly in foreign trade, in financial flows. And this actually has prompted Beijing to be more determined, to be more self-sufficient, self-reliant, to boost the domestic demand to support the economy. And we can see that over the last 2 years, China is more determined to support domestic consumption, the services sector, and also to pursue its own technological development, particularly in face of more potential sanctions from the US. The fact is that when you look at China rising income, when you look at the problem facing with a gradually aging populations, and these are all long-term trends China want to pursue anyway. And the trade war has just basically pushed the policy much forward than expected.
Could you please explain how investors should deal with this rapidly shifting landscape?
Well, to capture this rapidly changing landscape, we advise investors to take an active approach and particularly positioning along some of these long cycle policy initiatives in China. Now, if you remember, the Chinese financial market has always been a very policy-driven market anyway. And this kind of investment strategy has been working well for over the last 2 or 3 decades when you invest in the Chinese market. Particularly when you think about 30 years ago, China transformed from an export-driven economy into a big push for massive infrastructure investment, housing investment during the urbanization drive. And in recent years, China is definitely want to make the economy much more consumption-driven and domestically driven. Now, if you look ahead, we can see that the leadership in China will be focusing more on increasing its leadership in some of the key technological sectors, such as 5G, the online entertainment, and at the same time try to increase the service quality to some of its domestic consumer, and particularly in areas like healthcare, education, and insurance.
American policymakers have threatened to limit Chinese companies' access to US capital markets. What could be the impact?
Well, I think China has begun to realize that, it has sort of very high reliance on the US capital market. It's really become a risk, particularly in face of a more sort of hostile US policy towards China and also with the trade war. And in fact, you can see that China is much more eager to open up the domestic equity and bond market to the global investor and try to have a bigger sort of a weighting in some of the global equity and bond indices as well. And also for the last 6 months, China has really scrapped some of the investment quotas for foreign investors as well. And I think something also very important is that even though the trade war has really pushed China to have more policy support, China has not really put some of the reform agenda to the back seat. And particularly over the last couple of months, we've seen that there's effort try to implement some of the long-awaited restructuring of the domestic banking sector. In fact, over the last month or so, China has a plan try to consolidate and also recap some of the problematic smaller banks through mergers and acquisitions.
With banking sector reform giving rise to as many potential pitfalls as opportunities, which strategies do you think could help investors navigate this transformation?
Well, I think there are two strategies we can think about, right? For the more active investor who want to position in the Chinese market, our preference is actually the Asia, the onshore Asia's market, because it really captures the new economy in China. So sectors like the healthcare, education, internet, entertainment, technology that we mentioned before. And we can definitely see that the government is trying to expand and deepen the Asia's market so that it is going to create a lot more investment opportunities along the policy objectives of China. We continue to expect the Asia earnings is going to outperform the offshore Asia's market, which is basically capturing the old economy of China, sectors like banks, energy, telecoms, and those sectors are going to lag behind some of the new sectors in China. And also, we think that the Asia's market is going to outperform the earnings of most of the emerging markets as well. And it has been the case for the last decades or so. Secondly, if we want to take a more conservative approach, and we are worried about the transformation of the economy is going to increase more volatility in the financial market, and want to have a better risk management in your portfolio, we recommend to consider select long-short hedge fund strategy focused on the Chinese market. And this is particularly the case if we are concerned about there may be risks of a renewed economic and political tensions between China and US again after the 2020 presidential elections in the US.
Thank you, Anthony, and thank you all for listening. More podcasts on UBP's 2020 outlook will follow in the coming days. Stay tuned.